Hello, everybody. Thanks for being here. Today, we're going to take a little look at some custom strategies, just how to make them and some of the kind of particulars of how those work. Feel free to type questions into chat, and I'll do a little bit of Q&A at the end. We like to keep these around that's not accurate. We like to keep these at the kind of 30-minute to 45-minute mark. Great. Okay. So thanks everyone for being here. I'll just start off with the boring part of the disclaimers. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please carefully consider whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. Great. So I'm Jason Hitchings. I'm the CTO of Capital Market Labs. I'm the engineer/architect behind Trade Machine. I've been in the financial world for a long time, and I worked with Ophir long ago in a company that got bought by Cboe. So today we're going to look at custom strategies. We're going to look at when the different legs roll and what they mean. Then we're going to take a little bit of a deeper dive looking at spread this sell-off. And I'm going to show you how the share links work and a few things like that. I think the sort of presentation part of this might last 15 minutes or so. And then happy to take any questions. Hey, Max, good afternoon to you. So just something I've been kind of mentioning at the beginning in terms of our view of how to be successful with Trade Machine. We're big believers in writing your trades down, knowing when you're going to enter and exit, so you don't get pushed off of your plan or you don't let the kind of emotion of a volatile market affect your trading decisions. The back tester is not emotional. It does things based on rules. And if you see good results there and you are trying to mimic them in your trading, then our view is the best thing to do is to try to take as much emotion out of it as possible. We also think that trying trades over a longer period of time, trying 10 or more trades is really the only way you're going to know for sure if a strategy is working for you. If you're flipping a coin and the coin flips head 60% of the time, flip it once or twice, you're not going to know if you should be betting on heads or tails. It takes quite a few. Good news is if you figure out strategies that are working for you, you might have a few wins and a few losses initially, but if something is really working, then what you want to do is, average out those losses over a lot of trades and start to see it pile up over time. And I'm a personal believer in starting small, and once you have some profits, then to start, increasing the size of your trades. Just a real simple example of writing it down and saying when you're to enter and exit and recording your wins and losses. Okay, so I'm going to start looking at some custom strategies. We have quite a few new users who have come to the platform recently, so welcome. Thank you for being here if you're new. And I hope you get something out of this if you're one of our more experienced members as well. So initially you log into the Today tab. This has a lot of pre-made strategies. Each one of these you can click and see all the details of the strategy. We have a lot of help sessions on the Today tab, so I'm not going to focus on that too much today, but I'm going to go to the Backtest tab. When you're running a backtest, you can just enter a ticker, and you can enter if it's going to be call or put or all of those kind of strategy details. And from that, you can let the kind of simulator, run its course and simulate out a large number of trades for you and sort of see the patterns that tend to work over time. So I just want to start with something simple. And so I'm going to just look at AMD. I'm going to do a call, never trade earnings. I'm going to not have any technical opens or technical closes. And what we're seeing here is that, so if I don't have a comma, it will run 5 backtests. And what it does is it tries a bunch of different ranges of how in the money or out of the money it is. If you ever want to adjust those, you can just click this little settings button and adjust them here. So if I want to try a 90 delta and a 70 delta, meaning very in the money, a little bit in the money, at the money, etc., you can tweak those there. I frequently, if you're running multiple tickers, you can put a little comma in between them and you can run more than one ticker at once. And now when you do that, it's only using this at the money delta because it doesn't run 5 different back tests for each ticker. If you run multiple tickers, it only runs one back test and it uses the middle one. But if you only want to use the middle one, a little trick is that you can just put a comma after the ticker. And you'll kind of see that quite a bit just in our presentations and things. Many times we just want to look at the one back test, so we just put a comma so it's only using the middle back test. Okay, so this is doing a 50 delta call. And as you know, it's saying, okay, this is looking at 60 days to expiration. It's saying, I want to buy a call that's approximately 60 days in the future. I want to be long. I want to get out of the position before earnings and get back in after earnings. That's what never trade earnings means. There's nothing special about when we're opening it. We're not including technical conditions, nothing special about when we're closing it. So if I click the tile, I can come in here and see all of the trades. And we're starting this back test on, 3 years ago. So right now this is May of 2021. Starting the back test, we're buying a call that's approximately 60 days in the future. And so if you look here, you can see that, okay, as of May 2021, it bought an option that was expiring in July of 2021, and that was the 80 strike. So it goes through and it just places all of these trades. So that's just a very kind of basic thing. It's saying, hey, what happens if you just bought a 50 delta call 60 days out and just rolled it over time in AMD? You have 11 wins, you'd have 14 losses, and AMD has gone up over time. So even though it's a pretty basic strategy, you still, even though you didn't win more than you lost in terms of the number of trades, the ones you won made up for the ones you lost, and this thing made money. That's not surprising. AMD has been up. So there's a bunch of strategies on the left-hand side here: calls, puts, call spreads, put spreads. If I were to do a call spread, now it needs 2 different legs. So this one is saying I'm going to get long the 50 delta, which is the at the money, and I want to be short the 20 delta, which is somewhat out of the money. For you guys who have been around for a while, you know a lot about delta. If you are less familiar, then there's a lot of good resources in the Learn tab. I'm just going to click the Show Options chain here and let this load. It's pulling up the live options chain from Ebo. I'm going to go down to somewhere in the 60-day time frame here. This is a little closer to 60 days. And you can just see the deltas for the calls here, the deltas for the puts here. Technically, even though people don't generally talk, they don't say, I want to buy the negative 25 delta put. They say the 25 delta put. Technically, all of the put deltas are negative, meaning when the stock goes down, your position goes up in value. Yeah, so just looking, you can kind of see, okay, what would a 70 delta option be in AMD? So AMD right now is at 150. When you're looking out 47 days in the future, 70 delta, would be about $10 in the money, and something like a 30 delta would be, roughly $15 out of the money, just ballpark. So there is a quick reference for delta, and your brokerage will have this as well. And when we say 50 delta, we just mean the thing that's closest to the at the money price. So you can see these two are the 2 closest to the at the money. So when you have a call spread, there's 2 legs, the 50 and the 20. So in that options chain, I'll pull up the 20 delta just so you can see it, just for completeness. So the 20 delta would be way up here. And so that would be like, $25 out of the money. When it's using 2 legs, the settings that it's using, it takes this row for the first leg and it takes this row for the second leg. So that's why it came up with that 20 delta. And those things get updated when you click a link from any of these share links. It will update those deltas, so those can kind of change as you're using the product. So you can always click and update them yourself anytime you want to. So I just wanted to do a quick review of some of the strategies here and let you know how it's coming up with the legs that it's using and how it's coming up with the timed expiration. But today is about the custom strategies, and you can use a custom strategy to do any of these as well. But if you want to do something like a time spread or broken wing butterfly, something like that, that's a little bit more involved, then the custom strategy is going to be the way to do it. Now, that might feel like a lot or like a complicated topic when you're new to Trade Machine, and that's completely understandable. Or not so much new to Trade Machine, partially new to Trade Machine, partially just, if your options trading has been a little bit more, focused on one or two legs and not creating complicated strategies or going across different time spans. That said, I think many people find as they trade options over time, in order to be successful, frequently it does take both a combination of buying and selling options. It's hard to be successful if you're just buying naked options and hoping for the best. I'm sure it can be done, but you'll find that a lot of the strategies inside Trade Machine, when you're just owning an option every day, it's counting against you. It's like time is running against you. And so by having more than one option, if you're both long and short options in the same strategy, then you can sort of start to counteract some of those effects. You can counteract how time affects you. You can counteract how stock movement affects you. You can counteract how the movement of volatility, like if people's expectation of volatility in the future changes, then you can offset all of these things. You just have a lot more control. As Ophir likes to say, the only way to hedge an option is with an option. So I just started with a real basic example of just buying a call. And I just want to show you, starting very simply, how to do the same thing with a custom strategy. So when I click custom, you're likely to find, if you've been clicking around in Trade Machine for a while, quite a few custom strategies in here. And that's because when you open a custom strategy from a link, like for instance, this is a custom strategy that we'll go into a little bit later, it will actually create the custom strategy in your own list of trades. And so you'll see quite a few there. But just for the sake of the example, if I'm going to add a new strategy, I can say, basic call, and you can just do the exact same thing with a custom strategy that is here, but then you can take it a lot further. So something like this, a 60-day 50 delta call in AMD would be the same strategy that you're seeing that we just kind of went over previously. But now this little label says custom. It's no longer using these deltas because I have my own custom delta set. So wouldn't matter what I put here. When I'm using a custom strategy, it's using this delta. And you can add up to 4 legs here. So looking back at this, that's just exactly what I did. This is the sort of basic call. This is using a 40 delta instead of a 50 delta, but the same concept. And I can just reconstruct any of the strategies that you're seeing in the normal sort of default Trade Machine through the custom strategy. You get the exact same results in both places. And as mentioned, when there's a share link created, when I click that share link, it populates this. And if I don't have it in my dropdown, it will just create it for me. So when you'll see a list of these strategies, and deleting it should just delete it for you. It shouldn't impact anyone else. So when creating a custom strategy, these custom strategies are only the legs of the stock. I mean, if you have stock, it's the stock position that you have, and it's the legs of the options. A custom strategy doesn't have anything to do with if you have a limit set, if you have a technical open set. So if I click technical open, that's where you could say, if the stock crosses up above the 50-day moving average, I want to enter the trade, that kind of thing. All of those things are completely independent of this custom strategy, earnings, limits, all of those things. However, these are a list of saved back tests. Now these back tests, and we pre-populate pretty much all of the back tests that you'd find on the Today tab when you first log into the product. So all of these, spread the sell-off, MACD, they all, if you click a question, there's a detailed video or an article on it. All of those are pre-listed in your saved backtest list. When you load one of these, this will actually load all of the settings. So I'm clicking load here, and you'll notice that the start date and end date changed, the ticker changed. This says now put spread, short, never trade earnings, technical open, etc. So all of these settings change. So these backtest links, these saved backtests save everything exactly as it is. So when you're working off these, then now all of a sudden it'll be at a previous point in time. And we did that intentionally so that when you are looking at a backtest or you see a share link or you see something in the Pro Scanner, that when you load it, you're getting exactly the results from when it was run in that point in time. It's confusing if you're looking at a result on the Today tab and then you're looking at a day later and the results are different. But if you want to update it to more recent data, simplest thing to do is just click a little, test length at the top, and it'll update it to the current dates, and then you can change the tickers, etc. So that's the custom strategies are just the legs of the strategy, and if you have stock or not. And these saved backtests are the whole backtest and everything going with it, including the start date and end date. So there's a little button here, and it says close all legs with the front month options. So I'll look at a little example here. I've already saved it. It says short call, long leap roll together, but I'll just kind of create one just as an example of why you'd want to create a custom strategy. So let's just say that we want to own a long dated option, like we'll say roughly a year out. We're going to buy an at the money call, and we want to sell something shorter term that is out of the money. And so if we were selling an option, say 30 days in the future, and buying an option, buying a call in this example, that's at a lower strike out in the future, now we're creating a diagonal time spread. And there's different ways you might want that front month position to constantly roll that over or not. And that's what you can affect here. So just for sake of example, I'll do this long call. I'm saying 50 delta. So at the money, I'm saying roughly 360 days, or, ballpark year. I could say 365 days in the future. I'm going to add it. I'm going to say I want to short a call that's a little bit out of the money, and I want to do it about a month in the future. And I click add. So now I'm going to say long leap, short front month call, whatever I want to call this strategy. In my other examples in the slide deck, I used AMD, so I'm just going to switch to AMD here doesn't really matter. Okay, so let's see, there's some technical conditions here. So I'm going to remove the technical conditions. It says gains above. So this would close it anytime you made a 50% return on the trade. I'm going to set that to 0. So I'm kind of resetting all this thing to the very basic settings. Now, when I click on this, you can actually look and see all of the trades that are happening here. And I don't know if you can see it on your screen. Maybe I'll zoom in a little bit so that make that a little bit easier to see. And what you see is that we're starting back in May. We're opening this long call, and this is May of 2021, and it's, opening something, as close as it can find to 360 days in the future, which in this case, it doesn't have every single month when you look a year out. So it's finding something in March and saying that's the closest. And stock prices around, 80, and it's finding something around 80 to, yeah, the 50 delta, the at the money option will actually be slightly increasing over time as you look at an options chain. That has to do with interest rates and sort of cost to carry. It's something you don't need to worry about too much, but you might notice the at the money is sort of like above what looks like the current stock price in the future. And then it's also opening on the same date, these short calls. And this is May, and it's opening something in June. Pretty much very close to exactly 30 days in the future. Now, as we get close to this June 4 expiration, it says roll close that position. So these short calls are expiring out of the money here. These short calls that are expiring in June, but it's also closing this long dated, these 2022 options. And so each time it's closing not just the ones that are expiring, but it's closing the whole position. And you can kind of see that it's reopening the whole position and closing the whole position each time. That's what this little close all legs with front month options means. It means that you're going to close everything all together. On the other hand, if you're saying like, hey, I see no reason to keep, I'm owning this long dated option, why would I want to have this close every single time? I kind of want to like, try to turn this out of the money option into a little bit of a dividend, and then, hold this long-term call and kind of be profiting from selling this thing out of the money over and over and over. And I don't want to keep paying commissions and giving up the market width and all this kind of stuff over and over. By unclicking that, now I click save. Now when you look at this, you can see, okay, I'm opening this long dated option still out in 2022, but now it opens the short calls and then they expire out of the money. And then it opens again the short calls and then it closes them because we're at expiration. And then it's opening them, closing them. But now it's happening much more with the short positions, and it's only, occasionally closing the long ones once we get, closer to date in question for those longer dated options. And I'm just walking through, basically that exact same example here, that when we have that close all legs of the front month options selected, then everything's getting rolled all of the time. When I unclick that, now those options, it's just the short ones that are getting open and closed over and over and over. So then the question becomes, okay, well, what if we are doing a technical open? So at that point, with a technical open, so if, for example, I say, so this one actually said never trade earnings. And so we were seeing it close before this earnings date because I had never trade earnings. And so it will close 2 days before the earnings. So we were seeing it close the whole position because of earnings. So if I click nothing special here, then we'll see that behavior where it's like the short calls are getting rolled over and over. And now it's not closing before earnings. It's just rolling. It's either letting them expire out of the money or it's rolling them, it's closing them and reopening them the next day over and over and over. But the behavior changes a little bit. If I say, well, I only want to open to position, and if I use as an example, if the stock price crosses up through the 200-day moving average, and I'm choosing one that happens less often, stock could be above the 200-day moving average for a long period of time, but it's only going to cross the 200-day moving average much less frequently. So I'm intentionally choosing something which happens, less often, just letting that run for a second. And now we can see that these little green arrows on the chart are showing you when the stock is, when the strategy is opening a new position. And so you just end up with just a couple trades in this scenario. And when looking here, you can see that we kind of like open these positions and then these front months expired, at expiration. But then we went, instead of immediately opening front months, even though it's the same settings in terms of like when it would reopen the positions, it's not going to close all of them and reopen all of them together. But that egg that is short that expired out of the money, it doesn't reopen it until November. So it does not just immediately roll it open because the technical open says only open to position when the technical conditions are met. And so we see it wait all of this time to reopen the position for that front month option that expired. So it's kind of waiting for the right time to reopen it. Now, you could close, if you had that option selected to close all the options together, then it would close the whole position and it would wait, I think, until November to reopen the whole position. But if you're not rolling them together, it's going to keep the long leg, but it's not going to reopen the short leg until this happens again. So that's the behavior once you have a technical open with a custom strategy. Any kind of open it does, whether it's for both legs or just for one leg, won't happen until the technical conditions are triggered again. And so we see that big gap here from March until November before it finds the conditions to open it again. But it was holding the long dated options through that entire time. Okay, so I wanted to, okay, glad, Judy, that felt pretty clear. Paul says, any chance of allowing more than 4 legs in a custom strategy trade setup? Yeah, there's nothing stopping us from doing it. It's not a request we've had a lot, but definitely post that in community and ask if that's something that a lot of people would be interested in. We could certainly expand it. It takes some processing power, but that's fine. If people are interested in more than 4 legs, then that's something we could definitely look at. So it's a good question. Okay, so I just want to look at the spread the sell-off briefly, since it's takes a prominent position in our tool. It's one of the newer strategies. It's a 1x3x2 broken wing butterfly. It's always using the kind of AI developed skew and kurtosis technicals that we've built. It's a powerful trade. Has a high success rate. It's also relatively complicated. And the way that this behaves, oftentimes it can be a little hard to actually hold the position because you're kind of trying to catch stock while it's in downward motion. So looking at this example just from the Today tab, so we see that there's the CML spread the sell-off. So when you look at this, it says CML sell the spread off. If you ever want to see the details of one of these, you click the edit button and then you can see how the whole strategy is set up. So it's set up to be long, slightly out of the money, 37 delta put. All of the options that we're looking at are expiring 30 days in the future. So you start by being long, 37 delta, a little bit out of the money, and now you're short, but you're short 3 at the 25 delta. So now you're short 2. So once the stock goes below this 25 delta, now you're sort of rapidly starting to, these deltas are working against you as stock continues to move down. you have protection if it goes real low, and now you're kind of flat in terms of, if stock goes down below this 10 delta, it's not going to continue to hurt you if you hold it through expiration. But let's look for a quick second at the technicals now. So that was the actual legs of the strategy. But if you go down here and click technical open, let's look at the technical open. So it says in the last 30 days, the stock has moved down 10% or more. So the stock is moving down. It's also below the 200-day moving average. So it wasn't that the stock was ripping up and then went down 10%, but is above the 200-day moving average. It's also below the 200-day moving average. So this stock has been in like a downward cycle for a while. Then these are the skew and kurtosis measurements. And there's lots of information about this, but we used AI models to build them out. And basically what these are saying is, one, when the stock has been moving, it's tended to move more to the downside. But two, the actual size, how big the jumps are, have been sort of less than average. So that's what the size of the jumps is not huge, but they've kind of tended to be towards the downside over time. So this thing has been moving, down, which you can see that. So here's that blue line is the 200-day moving average. You can see the stocks below it. So this thing's moving down. So that's kind of the idea, is that when you sell this, you're buying this 37 delta put. So that means you want it to move down initially. And ideally, you want it to move down to the 25 delta, at which point you've sold 3 of them. And if it expires right at whatever that 25 delta is, so I can look at the options montage, I'll look roughly 30 days out. Okay, so here's the deltas over here. So there happens to be one really close to what we're talking about. So you'd be buying the 55, and then if it's looking at the 25, then you'd probably be short 3 of these, and then you buy a 10 delta, something like this. You'd be then long 2 of these to kind of balance it out. So as the stock moves down so right now the stock is at 56. When you put this position on it, you take it on for a credit. So if the stock does nothing, you're fine, you're good. But as the stock moves down, you start actually making a little bit of money as it's going from this, your first in the money put up until you hit the 3 that you're short. So at this point, if the stock just stops at 54, you're great. And we have a little image for what that looks like. So the stock, you're up here somewhere. If the stock goes up, you're fine. If the stock goes down, you start making a little bit more money. You start making money up until your maximum of the strikes you shorted. At that point, you start rapidly losing money, and you lose more and more money up until you hit your protection. But something that's a little subtle about this strategy is that if the stock immediately jumps to the delta you shorted, as happened with a lot of us in snow, not exactly immediately, but a lot of us took this trade snow. It showed up there. It was in here for quite a while in the today tab. But as that stock goes down to the strike you're short, for me personally, I spent a lot of time at my short strike. It didn't go far below it, but the premium in these out of the money options is going to jump up substantially. So if it immediately jumps down to your short strikes, then the premium is going to jump up in these a lot. Now the midpoint's going to, instead of looking like 72 cents at the midpoint, it's going to look much more closely. It's going to be a lot closer to these at the money. It's going to be more like 142. So all of a sudden, these are going to, roughly double in value. And so just from a premium perspective, it's going to look like the position's not doing well, even if you don't have any actual intrinsic loss, quote unquote. So even if it expired right there, you might do great, but your P&L and your brokerage might show a big loss on paper just because the positions that you're short have gone up in value a lot. So that's what happened with snow. I think some people kind of got forced out or just felt, that they didn't like the risk, or it moved against them more than they expected. It actually hadn't exactly moved against us. It's just that these at the money options just looked very valuable. Now the stock ended up coming back up, and a lot of us took, the strategy calls for exiting when you've made it, 80% credit. So if you took a credit of 1,000 when you put the spread on, then you close it when you have an $800 profit. So a lot of us, that were patient, managed to kind of wait it out. It can be pretty painful if you put something on for $800 and you're seeing it look on paper like it has a $1,500 loss for a while. So it's a really cool and powerful strategy. I just wanted to use this one as an example because that's the kind of the nature of it. So this one requires quite a bit of patience. Some of the other ones are not quite so involved. Yeah, so I just wanted to just kind of take a little look at that strategy. And then I just wanted to mention also that a lot of people were interested in getting implied volatility index, so sort of a way to look at to sort of trade the volatility directly of a stock. And so wanted to mention that will be coming back in the product. We're making a lot of good progress. Vendor pulled the data feed, made it kind of institutional only, but we built our own. And so that should be coming back into the product. And I think we can probably expect that sometime in May. Things are going smoothly with it, so I think it'll be ready relatively soon. Great. Okay, so we're about 37 minutes in. Hopefully that was helpful to some people. Sounds like Judy got some benefit from it. So how do we calculate the risk? Yeah, we have a whole, well, there's risk and there's max risk. So the way that we do risk is based off of reg T, like margin. So yeah, we don't necessarily look at things as in terms of the max risk. So for instance, I think with reg T, like which that's like the sort of binding document. I think the SEC issued it or something that says how much margin needs to be held in margin accounts for various types of positions. So for instance, if you have a put spread, I believe they say even if let's say you buy or let's say you sell the 100 strike put and you buy a 50 strike put for protection. So that your max loss in theory would be 50. But your brokerage, if they're using the sort of typical Reg T, I believe that the calculation for that is that you need to be able to withstand a 20% move in the stock price for that short put. So we're looking at things from a margin kind of Reg T margin perspective, not from sort of an absolute risk perspective. It's just kind of the approach that we've taken. There's also things like portfolio margins. There's other ways to look at it. We're using Reg T as the foundation of our risk. And we actually have, if you go over to the Learn tab, we did a couple sessions really focused on risk. So I just clicked the Learn tab, I clicked the live help, and then yeah, there's two full help sessions on amount risked. So there's one on sort of more or less on long risk and one on short risk, which might not answer every question, but hopefully it should go a long ways. Am I able to add a custom portfolio, 50 or so of my own symbols? Yes, absolutely. So if I go to the back test, I go to portfolios, you'll see that we've included a couple of the major indices and a bunch of sectors. From here, if you click new and click my best stocks, and you can actually paste into here just with either comma or space separated, and you can just add them in here. You click add as many as you want to. You can come back and add them. You can also just like delete them or adjust them. You can add a combination. You can add ETFs right alongside other stocks, etc. For annual subscribers, you can do 200. Now you'll have a portfolio here called My Best Stocks, and it will start back testing on that list of stocks directly. You can also delete the portfolio and all of that kind of stuff. Okay, I think Max was kind of clarifying a question on the risk of that specific strategy, so thanks for that. Widespread the sell-off alerts are coming to my email, but not appearing in today's dashboard. Yeah, so the Today tab, in order for things to appear in the Today tab, they need to meet a bunch of quality constraints as well. So they need to work over various time frames, like 5 years, 3 years, 2 years, 1 year. That you need to have more wins than losses. You need to have an average return of a certain amount. So there's a lot of these are essentially extra strict. If I do a portfolio back test and I add a bunch of alerts for a spread the sell off, I can add those. For instance, if something has won 4 times and lost 6 times, but has a positive ROI, I can add an alert on that and I get alerted to that. So it doesn't need to have a winning track record. It doesn't need to have more wins than losses to get your own alert on it. For things showing up in the Today tab, we kind of add extra strictness and scrutiny to it. So yeah, you can create custom alerts for yourselves that are a lot more broad than things that appear on the Today tab. These are sort of a very curated list of alerts. For CVS, the initial trigger for spread the sell-off was on April 25th, but earnings were on May 1st, which would seem to have increased the risk. The trade has a negative vega and would likely work against you as IV tends to increase prior to earnings. Yeah, so that's, I think, an awesome thing for you to backtest. What you could do if you wanted to look at that is you could say, okay, well, this thing triggered today, but it's 7 days before earnings. Is it a bad time to do it? So you could, pick the custom strategy and you could say, hey, what happens if I just trade this 7 days before earnings and I get out 2 days before earnings? Because that's what the strategy does. By default, most of our strategies, if they're not specifically an earnings strategy, will say never trade earnings. And that would mean you're going to close it 2 days before earnings and reopen it 2 days after earnings. But you'd only reopen it if the technical conditions are true. So in some sense, you're just closing it 2 days before earnings, because a lot of times the technical conditions won't all be true 2 days after earnings again. But you're basically starting from scratch after you close it. But you don't look at reopening it until 2 days after earnings. But you could say, yeah, is it a bad idea to trade this strategy in a 7 days before to 2 days before? Because that's the time window that you would hold it. And so you could actually, if you wanted to get fancy, you could say, look, I want to do the spread the sell-off AI. I want to see how it's done. So this is just against Amazon, but I want to look in the last 3 years how it's done in the NASDAQ 100. If instead of doing never trade earnings, I only do custom earnings, and right now it's 7 days before, or whatever number you said, and I know I'm just going to hold it for 5 days. Is it even worth, opening this strategy? And so, yeah, you could do your own analysis of that. So I'm running that test. I'm saying, is it worth entering the spread the sell off if I'm exactly, 7 days before earnings? Now, all the technical conditions need to be true, and they need to be true exactly 7 days before earnings. So the number of trades is going to go down quite a bit. But as these results come in, I think that's an extremely solid and reasonable perspective to have, that it's not the right time to trade it. And so, that's something that you can test. You can say, hey, the total returns went down, or the win percentage went down. And so I don't want to take this trade right now. And so definitely respect that perspective. When it comes to how the back tester and the alerts are working, it's just going to simply say, hey, if I'm not within 2 days of earnings, it's available to trade. And when we've done our analysis, we're not specifically carving out and saying, do not open this position if earnings are within a week. So we're allowing it to open even if it's 7 days before earnings and then close, even if it only holds a position for 5 days. And when we looked at that data as a whole, we said it looks good, and it was a the overall strategy results were good without any additional tweaking. For that reason, it will alert you as long as earnings are more than 2 days away. So we let this thing run through. We see that it's much smaller pool of trades. So in the last 3 years, we only have 48 trades or whatever. The average trade return has been like not fabulous. Theoretically, it's won a little bit more than it's lost, but on a portfolio back test, it looks like this Amazon, for instance, like a stock that has a high stock price, will kind of dominate in terms of how much cash, because they're all using the same size. And so the total return here is actually less important than the winning percent and the average trade return. So technically it's positive, but the win rate's below 50%. So yeah, I think what you said is very reasonable to consider waiting until after earnings and waiting for the conditions to be met again. So I think it's a good perspective. Max just mentioned that. Yeah, so to that point, so you're talking for mess up the ticker. Yeah, so now the earnings are like pushed out into the future, but generally speaking, when the earnings are for like a normal stock, not some like little penny stock or something trading for $1.20, 99% of the time, if the earnings are happening in the next week or two, they will show up here. It'll show next earnings, and instead of saying not verified, this will just be gone. And that if this piece of text is missing, it means that this Wall Street Horizon data has verified the earnings date with a high degree of certainty, and they put money behind that prediction, because there's a real announcement that you can go off of. And so this will say when the next earnings is. It's always a good thing to check when entering into a trade. And also right now, because earnings just happened, it's projecting out that roughly July 31st is what their algorithms are saying the most likely time for the next earnings is going to be. But these are not verified. They don't have an official statement from the company saying when the earnings date's going to be. And so if you're trading something which is sensitive to earnings, then we would say trading things that have verified earnings where this text is missing is a good idea. And if you have earnings, if this is a strategy that you're kind of under most circumstances, you're going to hold for 2, 3, 4 weeks normally, but you have earnings in 5 days, could be a great time to pass on it. So I think it was a really good point. Can we have a setting to skip a trade altogether if it would be interrupted by earnings. Yeah, I'm trying to think of, I mean, I guess interrupted by earnings is a little bit relative. So in this case, it would be like earnings within 30 days in theory for this like 30-day expiration. Like, yeah, you're buying options that are 30 days to expiration. So in this scenario, you would say if there's earnings anytime within the next 30 days, then you wouldn't want to put the trade on at all. A lot of times this particular trade, you might I mean, if it goes well, you could well exit it before that point in time. Yeah, I think that's something we could definitely look at. It's kind of like a variation on never trade earnings. Yeah, I think it's a good request, Paul. I think that's something we can definitely look at. Like says it gap down with earnings on May 1st as the picture changed dramatically, but may present another opportunity. Yeah, and that's, in short, that's kind of why we like try to be very intentional if you're going to take an earnings bet to take an intentional earnings bet and not to just kind of stumble through earnings. So that's exactly the kind of thing you'd want to avoid, holding this particular strategy, holding it through earnings and having a company gap down. And honestly, because this is a stock that has been, I mean, the technicals are set up here for a stock that's falling. It's like probably especially, precarious one to own through earnings when a stock is already kind of in technical, you know, if not technical failure, at least in like declining sharply. It's probably a really bad one to hold, a short delta position through, to be short a bunch of puts like through earnings would be, pretty dangerous. So, okay, great. Well, we're at about 50 minutes. It's kind of how long we like to keep these when possible. I really appreciate you all joining us today. We did a special one this week on Sunday, so we're not going to do the midweek one next week, but we will have a session the following week. Thanks for taking some time with us today. Yeah, thanks for all the great questions, and we'll look forward to seeing you next time. If you haven't already, please come check us out in community. Say hello. Max is there. He's a former options market maker. He's super knowledgeable both about the product and about trading, and he's always there to bounce ideas off of. And you'll find it to be a pretty welcoming community and a lot of great trade ideas and stuff. So please come say hello. And there's a lot of great resources in the Learning tab. Thanks for being a part of our community and have an awesome Sunday. All right. Thanks, everybody.